What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Palantir stock, ticker symbol PLTR, on a variety of time frames in anticipation of the next trading day, Thursday, April 25th. All right, guys, Palantir stock here today down 5 cents a share, essentially flat after it was all said and done. That's minus 0.23%. That's regular trading hours, though. We have faded here in the after hours, down about 40 cents or so. Actually breaking that 2130 level that we're going to talk about here in a second. When we get to the daily chart, we'll talk about that. But listen, guys, as always, with after hours movement, please take it with a grain of salt, because take a look at this here. Volume, I mean, we had one outline candle. This is a 1 minute chart, right? Volume, though, is incredibly low, and it's really easy to pump and bully stocks on low volume in the after hours. You would be shocked. But let's take a look here. Let's pull out as much bias as we possibly can here on Palantir, starting with a quick analysis of the volume profile here to try to see if the movement is actually supported when we peel back the onion on the 5 minute chart. So if we take a look here, now typically I would be circling the most obvious moves that I want to look at, and on Palantir here, I'm really only going to circle one. I want to take a look at this accelerated downside move, but I'm going to add in that little recovery that we got, because at the end of the day, or at the end of this move more so, it's kind of a net neutral move, essentially, more or less, right? But it doesn't necessarily have to be. If we take a look at the volume profile, we might be able to pull more out, but I really want to take a look at the entirety of the day and just see if there's anything obvious that stands out on Palantir here. Now, the open, again, we expect high volume, fades quickly. We get one green candle that pops. However, you can see here, it was kind of a intraday high of day, or at least for the intraday session. There was a wick, okay, which is going to pop the volume, a battle bar, right? We're seeing a lot of buying and a lot of selling clearly on one candle. Tends to increase volume, so I'm going to kind of ignore that. We get a fade into contextual volume by kind of mid-morning, at least in New York. And then honestly, guys, this move that we circled, we see that quick fade and then slower recovery. You know, bears, you guys would ideally want to see some bearish bias on this move here. There's just no bias here at all. Okay, very contextual volume, slowly fading into right after that lunch period, which is where we typically tend to see the lowest volume of the day. Very normal here on Palantir here today. So no bias really in either direction. Today, however, you know, with a little bit more of an aggressive downside move and then a slower attempt at a recovery, I think bears, being that, you know, you guys ended up giving up that overnight kind of pump that we saw, right? You guys were able to pull that back. You guys would really want to see some bearish volume. This shows it even better, or some bearish bias, I should say, in the volume profile on that entirety of that move. It's really not there, though, okay? Which, you know, if you're a bull, you wouldn't want to see bearish volume that supports the move. You would want to see no volume, you know, because the price action itself, it's done. It already happened. So what can we look at to try to pull out more information? The volume profile, and there's no bias there that supports that move. So let's move on now and take a look at the self-fulfilling prophecy psychological levels, starting here on the 30-minute chart. So we, of course, have the very popular combination here, the 50 period and the 200 period moving averages on the 30-minute. A lot of eyeballs here. Now, yesterday, we had reclaimed, we were above the 50, but we had reclaimed the 200 period off the open. Listen, guys, today, you know, technically in the after hours, we also gave up not only the 50, but in the after hours, we gave up that 200 period, which is currently, you can see it's lining up with 2130. But take after hours with a grain of salt. I am never one to be trusting of after hour breaks to the upside or to the downside. So today, we did, though, see a fade and a break of the 50 period. We ended up getting a retest, actually, and we faded. Now, the fade itself, for a more decisive retest and rejection, right? Bears, you guys would have wanted to see more volume on that rejection, but we got the move nonetheless. It just didn't happen to be on a big sample size of volume, so it could have been a little bit better if you're a bear, but you got what you were looking for regardless on that 50 period here on the 30-minute. But looking ahead here to tomorrow, guys, if I'm a bear on Palantir, you see this 200 period, I ideally, again, we gave it up in the after hours. If I'm a bear, I want to see any retest of that actually get a definitive rejection during the intraday session, where if I'm a bull, a reclaim of the 200 period, at least with this after hours price movement, right? A reclaim of the 200 period and hold as support, kind of similar to like the kind of bounce that we saw here. If we can see that here tomorrow off the 200 period, that would be great. That could set up the bulls for a retest of what was given up today of that 50 period, which is ultimately the goal, is to get above both and then pull away using the 50 as a support level along the way with both of those ascending. Okay, now let's move on here to the 4-hour chart and take a look. You can see here that we attempted here to reclaim the 50 period on the 4-hour. We gave that up again today, retests and wicked down. So we currently find ourselves with the after hours price here approximately 2%, 2.2% away. Not a tremendous move. We've seen certainly Palantir do crazier things. The goal here, if you're a bear, any retest of the 50 period on the 4-hour, you want to see that reject. Bulls, high volume reclaim, ideally as much volume as possible on the break. A low volume retest, right? A pull-in, lower sample size of people betting on, and algorithms and funds betting on the break back downside, and then boom, the bounce away, the confirmation on high volume. That's a great thing to see. All right, now let's move on to the most important chart of all. That's going to be the daily. The reason this one is in my head the most important, like quite a bit, is because it's going to have the most eyeballs, right? That self-fulfilling prophecy mentality. Now, yesterday we reclaimed 2130. Okay, we had broken that downside, which after a couple days to see a break, that wasn't ideal. We have now reclaimed it. We tested that today and held. That's a good thing to see. But listen, bulls, tomorrow, here's the story. Here's the obvious story that I'm watching. Any retest of 2130, I want to see that hold. Ideally bouncing away, again, on as much volume as possible. It's just as big of a sample size as we can get. Really holding 2130 in a definitive manner can set up the bulls to eventually make a push up toward that next level at 23. Okay, but remember, this is the daily chart, guys, so it's not going to show the after hours movement. This is the closing price. After hours, the stock is currently at, I believe, 2118 or so. So we're kind of just below that 2130, but again, it's on very low volume. So ideally getting back above 2130 and then seeing that high volume bounce away, using that as support. Whereas bears, primary goal tomorrow, use 2130 as a resistance point, establish it as a resistance point by testing it and rejecting on hard volume during the intraday session. Okay, now implied volatility. Let's zoom out and then zoom a little bit back in so we can get a little bit more context here. Compared to the last couple of months here, you can see it's in a higher range. So those of you who own options understand that you're experiencing a little bit of IV pump here in the last month or so. Okay, those of you who are looking to buy options, usually, ideally, going to want to look to buy options when IV is as low as possible. Okay, when IV is higher, if you start seeing a snap back toward equilibrium in IV, you're going to experience some IV crush. It can be a little bit of an uphill battle if IV starts falling on you while you're buying, or holding, I should say, purchased contracts. Now, let's take a look at the expected move. Okay, now just for context, for the expected move, of course, we don't have earnings until May 6th here coming up. So we can not have to worry about earnings with the expected move here. The next expiration we have is Friday at the close. Okay, so it's 2 trading days, and that's the difference between today's closing price and Friday's closing price. The expectation is plus or minus plus or minus 76 cents of movement per share by Friday's close compared to today's close. Okay, not today's after hours price. Today's close, that's what's being priced in by the options traders. But again, 76 cents plus or minus by Friday. So reasonably, the reason I brought up earnings is because we don't need to worry about an outsized volatility expectation on any given day. So we can divide that by 2. That gives us plus or minus 38 cents by tomorrow's close. But remember, we have to add back 50% to make up for the fact that that assumes 2 red days in a row or 2 green days in a row. And that gives us a volatility expectation by tomorrow's close of approximately plus or minus 57 or so cents per share. Remember, that's the one standard deviation expected move being priced in by the market. So the reason we care about that is not because we're necessarily expecting them to be exactly right all the time. The reason we care is because how do you make money in the market? Like realistically, right? Well, you make money by exploiting inefficiencies. Inefficiencies are not extraordinarily easy to find. Okay, at least like an arbitrage one, right? But that's not really what we're looking for. What we're looking for is inefficiencies in opinion. Let's put it that way. For example, if the market expects a certain move by tomorrow and you're like, man, I have a directional bias and I think it's going to be a lot more volatile than that, or you think, you know what, I think they're overestimating the volatility that's to come, that's something you disagree with the market about, and you can look to position yourself and make money if you end up being correct. Okay, and that really helps out, by the way, when you position yourself with a volatility bias and a directional bias, especially, of course, when you're trading options. Because then you're not only making money from Delta, you can also make money from Vega, IV change, right? So let's take a look here now. The last thing we can do is the directional bias out of today. This is just from today, today's options traders. So we had just under 200,000 contracts traded. 132,000 of those were calls and 64,000 were puts. So we're seeing a pretty heavy call side bias on the overall ratio. And then look at this. Out of the short-term speculators, the 0 to 20 Delta range, over 50,000 calls and just under 18,000 puts. A heavy call side bias, bullish bias, out of the short-term speculators as well. Listen, guys, with all 4 membership tiers included in the benefits that already exist within that tier, these are at the link in the pinned comment, by the way, we now send out my in-play stock alerts. These are the stocks that fit a very specific set of criteria that I make scalp trades on. They make up the vast majority now of my trading volume, okay? And the reason for that is because I take the most amount of trades on them, because they're consistently offering the most opportunity that have edge, right? I'm only after statistical edge. So gold all the way through platinum, they all get access to those alerts. Those are going out every day. If you want to take a look, again, take a look at that pinned comment. Today was actually an exception. Today was a weird day. There weren't really any stocks that fit my criteria today, at least with considerable edge when I look at all my stats. But listen, rest assured, the vast majority of days, these stocks are popping up on scanners across the world, fitting my criteria, and I'm trading them. Listen, I appreciate you guys, and I'll see you in the next one.